No, it was a transfer of equitable interest. So I put this deal under contract for 30,000, and then I sold the contract for 50,000. There was one other investor in there, so there was a $20,000 margin. One investor got 15, and I made 5. And I remember looking at that deal at the closing. I walked away with a check for $5,000. And I remember looking at that deal and thinking to myself, how many hours did I have to work as a firefighter to be able to make a $5,000 check, right? And I never looked back after that. It worked out. It worked out pretty good for me.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level, and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. Today's guest, Dave Seymour, is a private equity fund manager and was a firefighter and TV personality before getting into the private equity space. Dave, welcome to the show.
Dylan, thanks for having me, brother. I'm excited to have a quick chat.
I always like to start off at the top of the show by asking guests how they got into the real estate space.
Yeah, I was forced into it. I was forced into it. Long story short, I came from a blue-collar background in the south of England. I was born in London. I grew up in the south, emigrated to the States back in 1986. And here in America, there's a mindset around money which was very familiar to me, which was to, just trade time for money. Blue-collar background, that was all I knew. Anyway, long story short, as you said in the intro, I became a firefighter, paramedic, very blessed to be in that career. But I brought some financial illiteracy with me from England. The only way to make more money is to trade more time. And, I bottomed out bad during the financial crisis, during the crash. I was losing my house. I was working 120 hours a week, working construction on my days off, as most firefighters tend to do. And, I looked at the landscape and I went, I can either go down with the ship like everybody else or learn to do something different. And I had a flashback to a job that I was on in Boston. It was freezing cold. I'm trying to dig 4 feet down to a frost line so I can put in a deck so I can make some money. And these investors showed up on the job site. It was their property. And they looked a lot better than I did, brother. They were smiling. Right? They were driving nicer cars. Their coffee was a cappuccino latte tate,
That's
something
right.
or other. Right? And I'm like, what are they doing? One of the guys said to me, he goes, those are the investors. I'm like, okay, they own the house. We fix it and they make the money. I'm like, okay, I got to figure that out. And that's where it started. I went to an education event and then leaned all in, and I started doing real estate the same way I fought fires. When everybody else went running out, we went running in. I trusted my mentors.
Mm-hmm.
And, I turned it around. I saved my house. My career took off. My wife was able to leave her job. She was a labor and delivery nurse at the hospital, and she raised my boys. So America has been very, very good to me. So
Yeah, it's been pleasant. When you were a firefighter, what were those first real estate deals that you were involved in?
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Yeah. So like I said, I went to an education format and they taught me a strategy called wholesaling, which in the residential world meant if I didn't have any money, which I didn't, I was more than broke. I needed to learn documentation. I needed to learn how to legally control assets with a purchase and sales agreement, and then be able to sell the equity position, if you will, in that asset. So once I learned how to sell my equity position in a wholesale transaction, I remember the first deal I made, I sold the contract to another investor. And it was a bank-owned property. And back then they said you couldn't wholesale bank-owned properties. And I realized that you could. I was trained by experts. Once you get expert training, you learn some nuances that the average bear doesn't understand, right? And I remember I sold my equitable interest in this bank-owned property through a trust agreement, a land trust agreement, to another investor. Again, I've been trained. And I made $5,000, Dylan. $5,000. And I got so excited. It was like nobody could ever tell me that I couldn't do this business ever again. Nobody could tell me I was too stupid to do this business. And I just leaned into it. So in the beginning, that's what I was doing. I was doing quite a few wholesale transactions with bank-owned properties, and then it just grew from there.
That deal was that deal a assumable loan? Was that a subject to deal?
No, it was a transfer of equitable interest. So I put this deal under contract for $30,000, and then I sold the contract for $50,000. There was one other investor in there, so there was a $20,000 margin. One investor got 15, and I made 5. And I remember looking at that deal at the closing. I walked away with a check for $5,000. And I remember looking at that deal and thinking to myself, how many hours did I have to work as a firefighter to be able to make a $5,000 check, right? And I never looked back after that. It worked out pretty good for me. So yeah, it was cool.
When you were getting more involved in real estate, did you mentioned, not looking back, was it one of these situations where you said, okay, I'm going to go full time right now? Or was it you were still, working the firefighter job while getting more involved in real estate?
Yeah, great question. Look, man, I was blessed in the sense that as a firefighter, I had some time off, full days time off. And during my time off, I would work on my business. I'd get up early in the morning and work on my business. I'd turn off the TV at night and I'd work on my business. So I got to a point, it was probably around 8 or 9 months, maybe 9 months after I started, that I was able to look at what I was earning in real estate and compare it to what I was earning in the fire department. And it sounds egotistical, but it cost me too much money to go to the firehouse. So at that point, I transitioned out and went full time. And there's some regrets. I mean, I've been a blessed guy. I've done exceptionally well, but at the same time, it's like I look at some of the guys that I got on the fire department with, and they're, I just miss the stories. I miss some of that camaraderie. But
it's tough to replace being a firefighter with real estate.
Yeah.
You don't want to be putting out too many fires in real estate, although that does happen.
Yeah, it does. Sure.
I want to pivot here a bit, Dave, and ask you about the multifamily space. So going from wholesaling to single family investing, fix and flip, short-term, long-term hold, totally different ball game than the multifamily space.
Yeah.
What time period did you start getting involved in multifamily, and how did that look for you?
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Yeah, look, the small multifamilies always ran alongside the buy, fix, and flips. I learned very early on, again from experts, that if I wanted to stay in the game long term, flipping a house is a job. Multifamily is an ATM. It's a cash machine, right? However, you still need to learn the nuances again and the specifics of what it takes to buy one, fix one, rent one, manage one. So I got up to about 150, 120, 150 doors in a C-minus neighborhood up in Maine with a partner. And I really learned the grossness and the joy of multifamily investing. Our biggest units were maybe 15 or 20 unit properties. So that always happened. And then we came out of that with a ridiculous return on investment because I learned how to buy them with my tax returns and then cash out, refi, everything. So now we're working 100% with the bank's money. So we never had any of our own money in these deals. You build a portfolio like that and sell it. So it was always in transition. And what happened, just to speed this up, was I looked at the COVID situation. And when we were going into COVID, we started looking at what was going on in the marketplace. And COVID brought a massive opportunity for us to raise money en masse, raise as much as we can, and buy some of the distressed assets that we believed were coming into the COVID market. Now, I do that with a team. I've got feet on the street down in the Southwest Florida market, where my guys are, 30 plus years of experience in multifamily down there. I'm capable of raising a couple of bucks up here in New England in the Boston market, and then a COO, our operations manager, Eric, keeping everything moving forward, and then being able to oversee these multifamily acquisitions. But where we are today with multifamily is we are so bullish, it's ridiculous. Like I'm looking to take down as many multifamily assets as I can in the next 3 to 5 years. And here's why. There is approximately 3 trillion was the last notation that I took in distressed multifamily properties coming into the marketplace over the next 24, 48 months. And those are because of the craziness of the COVID crisis, where we saw this massive compression of capitalization rates, meaning, the return on investment was so small. And we know what happened afterwards. All that free money came in. People who didn't know what they were doing were buying. Interest rates go up. Capitalization rates are now trash. They're working in a deficit. They can't raise the rents anymore. And that creates a massive, massive buying opportunity. So where we are in multifamily now, I was explaining to you before we started recording the podcast, was I want to arm an army, if you will, with education on how to buy these things, so that we can either partner with people or teach them and have those really good alliances for folks who want to get into cash flow during an inflationary crazy crisis, which, whether you like it or not, is coming down the pike. It's coming our way. The governments and the world order can only push this stuff off for so long. So that's where we're at today. We're teaching people how to do it, and then we're buying as much as we can.
Now, when you are looking at buying these properties currently, is any of the capital through syndication, or is it purely bank financing?
No, you can't. I can't. I don't know about anybody else. I can't write from my personal business or bank accounts checks for 30, 40, 50 million dollars, right? I can't do it. I wish I could. I probably wouldn't be on this podcast, Dylan, if I could. Right? So there is always the LP position, the limited partner position, or just think of that as the money down. Well, where does that come from? That comes from private investors. That comes from family offices. That comes from some small retirement funds, things of that nature. And what we're able to do is now as a team, we can either do, as you said, a syndicated deal, which is a one deal, one group of investors, or we can go into a fund structure where everybody piles capital in, and then we as fund managers or GPs, operators, will go out and put multiple assets into a fund if they're part of the buying criteria and they make sense. What we target coming down is some funds that we're going to start. We'll start looking at really pigeonhole an area. This zip code or this specific geographic area could be a fund structure, but we can still tuck syndicated assets inside of a fund as well. So you could have 2 levels of investors in there. So it gets super creative. Every deal is on a deal by deal basis, but you need an army of people who understand what's going on. An educated investor always makes a better partner.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
When you talk about Florida, but also coming from the Boston area, by the way, I lived in Boston for about 5 years, so I have an
Okay.
affinity for all things
Sure.
Boston. It was great for
Yeah.
sports when I was up there from like
Yeah.
2013
Yeah.
to 2018. But then
Yeah.
you talk about Florida. Florida is probably the mecca of all things real estate investing. Even if people have an established real estate business that is active outside of Florida, I see a lot of entrepreneurs, leaders within companies, owners going to Florida for the culture, the weather, so many
Mm-hmm.
different
Mm-hmm.
aspects of real estate. When you're in the commercial space looking at these deals, are
Mm-hmm.
you agnostic to area? For instance, are you looking at deals all across the country, or are there certain areas that you're maybe careful, perhaps more so than other areas?
Yeah, great questions. Look, man, it's data driven. Okay. A multifamily asset, say 50 units and above, is a data driven acquisition. So, what do I mean by that? I want to see job growth, population growth. I want a good geopolitical environment in which to do business. I don't want to be having my balls handed to me every time I want to make a decision as an entrepreneur and investor, right? So, I want some good alliances, some good feedback, some good feeling with the communities and the states and the
Yeah.
counties in which we invest. So when you think about Florida, still the number one destination for retirees in the United States of America. On the East Coast, on the West Coast is probably Arizona. So if I'm in that marketplace, we'll live longer, we have more retirees, and statistically it shows that for every retiree moving to the Florida market, it brings 4 service jobs. So those 4 service jobs, medical facilities, anything to support the health of that retiree, anything around hotels, around restaurants, around maintenance of properties, anything of that nature as well. All of these jobs are moving in. So if I've got job growth, what does that mean? It means people either need somewhere to rent or somewhere to buy. They can't buy because they can't afford. Period. End of conversation. The
Yeah.
prices are just way too high. Even though they're coming down, it's too high. So what
Yep.
does that mean? That means I've got a renter community. I've got a renter state. So if I've got that demand, I have a responsibility to meet that demand. Now, can I find that in Tampa, MSA? Tampa's tough. Miami's tough. But once I start coming out into the secondary and the tertiary markets, I can find those data points. And we use a lot of specific software to target that data pull so that I'm getting the very best information I can when I'm looking at an asset class. And again, on the education side, that's what we give to our partners in this stuff is like, here, use our software, use our data, use this. Let's all be looking at these deals the same way. Are we all seeing the same data set to make sure that we're buying the right
Mhm.
properties in the right market? So,
Okay.
it's not it's agnostic to the extent that if the numbers fire in the markets that where these points hit, then
Yeah.
yeah, I'll buy in South Carolina, I'll buy in Texas, I'll even buy in Boston if I can find. I'm never going to get the right geopolitical market in Boston, but I can still get the good data points in Boston. So yeah.
That's a good point. Quick side note on that. When I moved to Texas from Boston, I was completely unaware that they didn't winterize anything. So like a small freeze is a disaster in Texas.
Yeah,
Whereas
Texas went through that. I remember that. All the pipes burst. Yeah, I
I'm like,
remember.
this is crazy. How come we
Yeah.
can't take some of this technology that we're doing in the Northeast? But
Mm.
when we talk about the education component of what you're
Yeah.
doing, Dave, what are
Yeah.
folks' backgrounds when they're taking on this education? Are they already active, maybe in the multifamily space, maybe in single
Yeah.
family, or is it
Yeah.
a
Yeah.
mixed range of people?
Yeah, that's a great question, brother. It really is. And to go 0 degrees on that, the less they know, the better it is, because I don't have to undo any kind of bad habits. Now, that being said, it doesn't mean our education is a couple of $1,000s. It's a weekly education format of which they need almost to graduate. To be able to answer the right questions, to understand exactly how we do this business. We focus heavily on business owners and people already with an entrepreneurial background. But like I said, it doesn't matter who you are. Anybody can do this business with the right education, support, and implementation. But business owners specifically, they tend to have a little more depth financially to be able to put some money into their own transaction or use some retirement funds. These are the folks who are smart enough to understand that the noise in the marketplace about retirement and being all set is a bunch of BS. And they're the ones that get real hungry for what it is that we're doing, because they know the government ain't taking the property. The rents are going to be coming in, because even in the worst times ever, people will pay their rent first. So they know they're in a cash flowing asset. So on the education side, if you've never done a real estate transaction, you're welcome. If you've done thousands of real estate transactions, you're welcome. But that being said, this isn't for everybody, because you will have to pass some kind of interview process with us to make sure that there's an alliance. I don't look, I am who I am today. I don't have to be polite or politically correct anymore. But there's a saying in my business: dig jams, not welcome. And a dig jam is somebody who says, darn, I'm good, just ask me, right? I don't want those people around us. They're not teachable, right? You got to be teachable. You got to be
Absolutely.
teachable.
There's
I
enough
don't
of
need you
them in
to.
real estate already. We don't need more of them
Yeah,
in
yeah,
education.
yeah, yeah, yeah. I want entrepreneurs, not entrepreneurs. Okay, that's what I want.
I can echo that 100%. I have so many stories about getting a real estate license and people telling me that you can't be working with investors and doing creative deals and have a real estate license. But here we are.
Yeah, here we
Dave,
are.
we are coming up on time here. Where can
Yeah.
folks go to learn more about what you're involved in? How can folks find you? Where can folks reach out to you?
Yeah, if you want to get a little head start on any education with us, you can go to legacyalliancewealthclass.com. Legacy Alliance Wealth Class. My team, by the way, Dylan, they'll give you all the links and stuff of where to go. We got some giveaways, some books that we've written that begin to bring people up the education gradient. You can get me direct on LinkedIn at Dave Seymour. Freedom Venture Investments is our investment arm, freedomventure.com. But again, they'll send you all the links. If you want to find me, I'm findable. Okay.
Dave, thank you so much for coming on the show here today.
Thanks, Dylan. God bless.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.